Starbucks is on the top of our list. Pinterest is in there, of course, as well. And EA should be kind of fun. What are you most excited for here, Renita?
I want to look at Pinterest to find out how are all these advertising efforts coming along. Yeah. So they tapped Amazon to be their first third-party Pinterest advertiser. And we'll find out what this company kicks off with, if there are any other initiatives coming following it. But it wants to make money off of every pin that is posted on the website, something that has not been easy because those pins on Pinterest, they lead you to other websites. And so they really kind of cut themselves off by making that available at the top.
I'm still, if I had $1 for every pin, that's basically their business model here that they need to capitalize on. You know, I've kind of dogged them a little bit, Kevin Green, because it just kind of seems like in 2023 they would have figured out the best way to make money by now, given that the whole app is basically built on, I mean, not in a negative way, but like consumption materialism. I mean, it should be a pretty easy place to just plug us into the buying machine.
Yeah, I think what they're trying to do now is try to create their own ecosystem, and that's what Renita is also kind of alluding to. Is not only just that partnership with Amazon, but also trying to add new features to the platform. Yep, new videos and all these other things to be able to benefit small businesses, and then also providing these small businesses the tracking tools needed in order to see their performance. And I think that's going to be a key area for them to focus on here. And they've spent a lot of cash on it. Let's see if it's going to be reflecting some returns here in this earnings announcement.
That's a good point about the expenses that they've made, because the stock was trading closer to what, $90 during COVID, because they had a huge amount of, that was the COVID high, 90 bucks. They had a huge amount of user growth. I don't really think that's the problem here, Renita. It really is about the rate of sales relative to the user growth. They've been earning on an adjusted basis, but losing money on a GAAP basis. I'm not sure if the market's going to really pressure them for that right now. It seems like if they demonstrate a lot of big revenue growth, then that's a step in the right direction. Right,
and if they do make this goal, the expectation for revenue growth, which is for revenue to be at around $698.28 million, then that would be 5% growth. And so that would be better than what folks might think that the company would do at this time around. But they've got to find a way to turn all these folks into money. They've got to find a way to turn these pins into money, not just the people. Yeah, and do it at a pace commensurate with, at very least, Instagram and other social avenues that are going to be getting eyeballs and sales, to the bottom line. The fact that Pinterest has been trading near the highs fits with the sector, but relative to what's gone on in Meta, it's been a laggard. Meta up 100% on the year, Pinterest up just shy of 45%. That's fine, but again, it just has been a lot more sluggish to get off the mat during this big growth redux rally that we've had. EA and Starbucks, very stock-specific stories for EA. For Starbucks, more of a macro discussion. Am I right there, Kevin?
I definitely want to be able to see any type of growth coming out of China. I think that's going to be the catalyst for it to be able to beat earnings. And right now we are seeing a pretty significant reaction to the downside for the stock. We're at least about $3 to the downside as we do get earnings coming in here. And I think the other area is to really focus on the operating margin. If they're able to kind of keep that contained as cost has gone up, especially for some of the raw input goods that is needed for their business. So I think at the end of the day, that's going to be the key area to focus on here. And it does appear that they reported $1 per share versus the estimate, so they did beat on the top line. And we are looking also at the revenue right now coming in. I don't actually have that revenue number. Revenue came in at $9.2 billion. That also beat the street's expectations by around $90 million here. But we are seeing a move to the downside. Operating margin actually was at 17.4%, and the street was actually looking at operating margin coming in at 16.8%. So I'm not sure why we're seeing a drop to the downside here. Let's maybe look at the numbers a little bit more, because if you're looking at just those two or those three metrics, it looks like they accomplished at least half the goal.
True. Their report is kind of like shying away from giving a China year-over-year comp, because the expectation was for 42% there for China comps. I see all the other numbers, Arenita, but I'm looking for China right now, and they've kind of buried it in here.
Oh yeah, it's a reason why it's not all the way up at the top, because this was one of the bigger expectations to come in better, or if it showed that it was better, then that would prove for more of an upside to this stock, right? But I also
there it is, 46%.
You see it? Great. We have it coming in.
So, all right, I don't know why they don't put that at the top of the line here. Have some self-awareness, Starbucks. Okay, so that's a nice little juicy beat there.
Okay, that is a good beat. Same-store sales, however, grew by 10% globally, and then 7% North America, 24% international. Those numbers all sound good. I saw a few analysts predicting 11% growth for the entire picture.
Maybe a little shy on that total comps. That's what you're citing there, the 10%. Street wanted 11, actually.
Right, the Street wanted 11%. So not sure how people are going to react to it.
Well,
maybe this is what they're
right
acting to it right now, and yeah, they're not seeing it, but they're not looking at the separate same-store sales pictures of the international versus growth in the Americas. I think international should stand for something, given the fact that the China comeback has not been as strong as expected, but still being able to, along with China, achieve 24% growth should mean something.
I think so too, frankly. I think that's pretty well said. 24% international growth, and you know, comps still above 10% here, even when they miss a little bit. You know, that's pretty good. I think Kevin Green, but I'm surprised we're not up, frankly, because China's beat their 5 percentage points on comps is a pretty chunky beat.
Yeah, so I think the reason here, after looking at this data, the comp sales when it comes to North America actually did miss the Street's expectations. They were looking at around 9% from the estimates that I looked at. But we did see international obviously beat that estimate. Now, if you're looking at the overall revenue mix, North America is obviously the bigger portion of that revenue mix. So even though you are seeing a better comp year over year for international, the actual dollars in themselves when it comes to revenue generation is going to be a lot less, just because of the proportion or the mix that they have with their business from a geographic standpoint. So that could cause a little bit of angst when it comes to the marketplace here. But you take that aside, the growth metrics here do appear to be, pretty sizable comparative to what they've seen over the last couple of quarters here. So maybe we see a little bit of a pullback today. We get some more information on the conference call as far as where they're seeing strengths in their business, and hopefully that can continue to push the stock to the upside.
Okay. Yeah, the move down here by about 1%, probably not too much to stress out about yet, but to your point, if you want to point something out, maybe a little bit of more sluggish growth than expected for North America coming in. A little shy of what analysts were looking for. So can't say it's a perfect report, I guess, but it certainly doesn't seem like a bad one for Starbucks. Let's go over to Pinterest, and we got some numbers there, Renita. What stands out to you?
They did it. They beat expectations for earnings and revenue. Looks like earnings per share for the second quarter came in 21 cents. That beat that 12 cents estimate.
Nice.
Sales were at 708 million, beyond the $698.28 million estimates for Pinterest. And so they're citing, in particular, continued momentum with consumers and advertisers. They said that they were able to further accelerate their pace of innovation. We see all the sparkly language coming out right at the top.
Yeah, they're selling it. They're doing a lot better job than Starbucks
they
is.
are, definitely.
Selling their earnings release here.
Absolutely. They say that users are coming back more and more often. They're engaging more on the platform as well. So to that note,
8% higher is pretty good user growth, better than expected, to 465 million.
Oh, absolutely. They're seeing more people come in and use this platform. Maybe I'm interested in finding out, well, what are they using it for now? Because I know what I use it for. I use it to visualize different rooms in my home, or or
that's
things
how
like
I think about it too.
Right, and Jenny brought up a good point on Next Gen earlier today. She puts runners things on there. I look for hairstyles on there and everything else. So
what am I? I don't know what I'm looking for on there. I don't know, poker chip sets. Kevin, you as a Pinterest guy, I mean, what are you penning out there? Your next book you're gonna read?
I haven't used Pinterest in easily about 4 or 5 years, honestly. So I don't use the application. Look, I'm an old soul, man. I don't use all that type of technology, but I use Amazon. If I want to buy something, I just buy it. But I do believe that they actually did miss on ARPU when it comes to U.S. and Canada. So I'm kind of looking at that number right now. I'm seeing their report showing $5.92 for ARPU for Canada. I think the street was actually looking for $6.04. So that's a little bit weak when you're looking at the per user. And now, Renita, you bring up a really good point. As you bring in more additional users to the platform, sometimes that dilutes the revenue per user metric. And I think that's kind of a delicate balance. So you want to have new users, but you want to be able to monetize them a little bit quicker, which you were kind of alluding to earlier. And let's actually look at the
Well, can I point something out there, Kevin?
Overall,
just to
definitely
to pile on to that statement there, because it really is a kind of good backbone for a big point here, which is that their user spending literally like drops to nothing once you leave U.S. and Canada. It's like less than $1. It's less than 90 cents per user in Europe. At least that was the estimate. And then the rest of the world is basically nothing. It's almost close to nothing. It's like a dime maybe was what the analysts were looking for. So compared to like $6 average revenue per user in the U.S. and Canada, if they're adding on international users, that revenue average is going to go way down. Way down. What are you looking at there?
And the average revenue per user for Europe also did miss the street's expectations, if I'm looking at it here correct. Actually, no, it beat the street's expectations. So in Europe, it actually went up to 91 cents. The street was looking at estimates at 79 cents. So that's a good beat. But once again, when you're looking at the U.S. side of the business, which is going to be the bulk of their business, they did actually see a reduction there. And so that could compress margins for this business, which is probably why we're seeing a little bit of some choppiness when it comes to the stock post earnings.
All right. Yeah, this is, I think, an okay report, but perhaps not the best one.
No, definitely not.
Last thought, Renita?
They're expecting third quarter revenue to grow a little bit, but the high single digits, and they're going to see that for year over year, of course, growth. And they're looking at operating expenses to grow as well. So that might suck up a little bit of the profit that they're going to see.
Sure.
So definitely. And then continuing to look at what the ad picture looks like for the company if they bring on any other strategic partners like Amazon.
All right. Like it. Nice job, guys. Really good work there. And doesn't seem terrible, really, Pinterest. They still got a lot of work to do, but I think we know that. So we'll see how the market deals with that, as they need to keep their profits coming per user as they add them on, which is going to take some investment. A little bit of a precarious growth story, but at least it's growing still and moving in the right direction. Thank you, Kevin Green and Renita Young. Very nice.